G'day traders, I'm Greg McKenna. Welcome to Markets Morning. It is the 22nd of October. Happy Thanksgiving to those of you who celebrate it, particularly my American viewers. It's a good day, whether you're American or not, to think about the things that you have and appreciate them. So in that sense, happy Thanksgiving to everybody. I wanted to start off today with this quote from Anthony Crudele, but I'll get to that in a sec. Just quickly, overnight, there were some rallies, but they weren't very strong ones. So that suggests to me, when I look at, say, the S&P 500, or I look at the NASDAQ, or I look at Brent, or I look at WTI, that quite possibly this is a pre-holiday, easiness, position close, whatever you want to call it, and we need to be careful next week. But we can talk about that as we go through. It's just the sense that I get. The S&P 500, for example, finished at 2649. That's up 8 points, but it's 21 points off the high. So hardly strong. You'd say, in Bill Williams kind of terms, that the Bears won that one because it finished in the bottom third of the candle. It's an interesting way to think about charts. Just look at the candle. Who won? Was it in the top third? Was it in the bottom third? Or was it indecisive in the middle? It's just a nice, neat way to think about where that path of least resistance is. And it's clear when you look at the S&P on that candle and you look on WTI or Brent on their daily candles, that the Bears won, which is really interesting because WTI and Brent were up 1 or 2% each, which is, I find, really interesting. Anyway, the Aussie dollar's a bit stronger, so is the Kiwi. We had a story from MNI last night saying that the Fed is ready to pause. Now, we know that. We talked about that last week. You could sense the change in the language from the Fed, but we'll keep an eye on that because that could have dollar impacts. But like oil, like the S&P, Euro has not been able to hold on to its gains. That's despite a rally in Italian bonds. There is some chat that there is, some struggles with Brexit, Spain's being a bit narky about Gibraltar, unsurprisingly, I guess, even though I've never mentioned it. It's just been kind of simmering there in the background. The French about fishing rights, kind of unsurprisingly as well. So we'll have to wait and see how it goes. We'll know in the next couple of days. We'll have a better indication. Anyway, let's dive straight into the charts. This is from Anthony Crudele. I was interviewed by Anthony a month or two back in October, I believe, if I think rightly. It was done in September, but played in October. What he's written, and this is germane to the conversation yesterday about that Kiwi signal. A mistake I made was going from one indicator to the next looking for edge instead of developing execution skills on my indicators. I saw a success in trading when I learned my indicators' strengths, weakness, and executed accordingly. You know how when I say the first signal after a big move on the MACD is often the wrong one? Kiwi yesterday. Now, when I looked at it, I looked at where the signal was. It was okay because the actual signal to sell, so the level at which the price would have triggered a sell stop, was below the market. But when I got off air, once I'd recorded this, I looked at it. And I hadn't even seen this quote from Anthony. I picked that up on LinkedIn later on yesterday. But I thought about it, I looked at it. The inherent weakness in my signal is the very first signal after a big move is often a false move. So the amount that I had order was much smaller than normal because of that. Anyway, just something I wanted to highlight, something to think about. It's about the execution of your indicators. It's not just your indicators. And even things now like, where's the stochastic relative to the MACD? Are they both signaling the same sort of thing? Those kind of things. Anyway, let's kick off with Apple because Apple's a good metaphor for what's going on. The news out of Apple last night is that Foxconn, one of the big suppliers, is trying to cut 2 or 3 billion US dollars worth of costs out of its business. Now that tells you something about what's going on at Apple. And Apple is a metaphor for US stock market and the NASDAQ in particular. Now I've got to lean forward, excuse me, but you can see this is a classic case of the NASDAQ. We go vertical, that's sustainable, that's probably sustainable for a while and you'll get moves backwards and forwards through it. That's getting a bit unsustainable, and that's definitely not sustainable. Oil is the flip side of that at the moment, but we have to wait and see what happens there. So we had that break. Now we've come back, we've tested that, we've broken, right? Now, I can't even read those levels, but hopefully you can by blowing it up. I can't blow it up because then the pixels become too big and it takes forever to render. But anyway, so what I'm saying here is that Apple's still under pressure, therefore the Nasdaq's still under pressure. Therefore, even though the 0.75% close is a good one, the pressure may come back next week. So keep an eye on that. Keep an eye on what's going on at Apple. It's struggling a little bit. People might be wrong. There's a lot of people who say that its services business is what we need to focus on, not unit sales, and I have great sympathy with that. But just at the moment, in this uncomfortable transition period, we have to wait and see. While we're talking about stocks, we might as well kick off with stocks. And that does not look like a bottom, does it? Just have a look at it. That does not look like a bottom. That looks like a market that wants to retest its lows and prove to itself that it's happy to buy at 2,600, doesn't it? This is the S&P, obviously. And this is futures-based CFD. But do you see what I mean about how weak that day ended up being? Now, of course, it's going to fade into the lows because who's going to want to take a big, long posse into the holiday? And it's going to be thin on Friday because it's Black Friday, blah, blah, blah. Now, if we get some really good retail results, which is possible given the US economy is doing well, if we do get some really good retail results, then we might see a bounce. But that just in and of itself, the last 3 days price action is not the price action of a strong market. We just have to wait and see what happens next. For me, I'd want to see it back up above Tuesday's top, maybe even higher. And I can envisage still a market where you got back to 27.73 or something like that, and you could still go lower, even 28.23. But anyway, just for the moment, right down here, an inside day doesn't tell us anything, but that candle is not a bullish candle by any stretch of the imagination. And of course, durable goods last night were weak, weaker than expected too. Existing home sales were better, but still relatively weak. Consumer confidence was weaker than expected, and the US Economic Surprise Index has fallen to 3.9. So in that sense, it's struggling a little bit. Now, if we have a look at the local market, that is a tradable bottom. But it's a tradable bottom not because I'm bullish, although that's a pretty good candle yesterday. It's a tradable bottom because it's got an obvious stop. That, for me, is what makes it a tradable bottom. And I thought that yesterday as I was watching the price action. And a bloke who is really good on long-term pivot points, don't ask me how they work, but he's pretty good at it, sent me a text. Oh, sorry, sent me an email yesterday saying that it might be the low. Now, that's not suggesting that I'm going to take signals from someone else, because that's not what I do. But I know he's got a good track record. So, but you can see why it's a sustainable bottom. You can see where the stop would be. And it would be up to your own risk tolerance as to how much you want to run through it. But for me, a close below 55.85, call it 80, whatever you want to do, gets me 54.49 or thereabouts. So easy tradable bottom, stop and reverse if that's your game. You'll see a jump in the video. I had to stop and put a cut in. Sorry, I hit the wrong button when I was going through. Anyway, to the DAX. And the DAX actually, like the SPY, does look like it might have a tradable bottom. It's going to be thin Thursday, Friday. We'll just have to wait and see where things go. But obviously, again, you can see the tradable bottom. 11,000 or thereabouts. The previous day's low was 11,000, which was exactly... Remember, I've got 11,000 and 10,000 as my targets. But for the shorter term traders, there's a tradable bottom there now. You know, you can go where it goes. Let's get on to foreign exchange. Euros day was not the best day ever. So if we blow this up, let's have a look at the 4 hours and you get a sense of it. So nice rally, and you can probably, you know, draw a trend line. I haven't looked at a 4-hour chart today, but you know, you could probably do that and say, well, maybe, you know, it's a bit tenuous. Let's get rid of it. But overall, on the 4 hours, it does look like it is rolling over. The turn in the MACD was consistent with the turn in... Oh, and one thing I should say is the first signal on the dailies is often the incorrect signal, not necessarily on the 4 hours. Different execution strategies for 4 hours or dailies, though I trade mainly, almost exclusively, off daily charts. So speaking of the daily, what have you got? You've got a break, you've got a hold. We couldn't get to the 50%, right? We've had a move through the 1440 region, back below it, bearish engulfing, and then not the most bullish day you've ever seen. That's kind of halfway. So I'll have to wait and see here. There's no real clear signal there. The dailies do still suggest to me a little bit of upside. You could fall all the way back down to 113. But what I've said in Markets Morning this morning is we've just got a box. We're just in a range. If that M&I story about the Fed is true and it gains traction, and durable goods and some other data support that, then Euro can go back to 114.40, can go back to 115.85 or thereabouts. But at the moment, still got issues with Brexit, still got issues with Italy, those kind of things. So we'll keep an eye on that. For the moment, as I said yesterday, if I don't have to trade, I'm not going to trade just at the moment, particularly with Thanksgiving. In fact, my message today, once you finish watching this video, is if you're in the snow, go to the snow. If you're in the beach, go to the beach. Just relax. You know, there are a few days every year where if you don't have to trade and there's no obvious trades, then don't trade. And, you know, at the moment, that's probably it. Sterling, look, nothing. We're waiting on Brexit. Waiting on Godot. 126.60, 133. That's pretty much your parameters. For the day trade, for the intraday traders, you don't even really have a range there. So again, you know, not worth playing. Options. Options. Speaking of options, the Aussie. Head fake, breakdown, break up, where to next? The reality is that all of the key indicators for the Aussie went up last night, even though that Dow looks dodgy. So whether it was copper, even though iron ore fell, copper looked better, stocks looked better, spreads haven't hurt it. In fact, the Aussie underperformed all those things with that fall to 72 cents or wherever it fell to yesterday. So it stayed above 71.80. So I stayed in my long, and we'll see how that plays out. It's not the best looking long in the history of the world, that's for sure. So we'll keep an eye on it. As it stands at the moment, if it breaks down through 71.80, I would say that any move towards sort of 74.40, 74.50 is aborted. I'll have to wait and see on that one. In terms of the US dollar overall, though, if I go to the CAD, which is always next, where am I? Everything's moved here. Sorry, folks. Then you've got the reversal off the 1.38. That's a warning sign for the dollar. Obviously, now we come back and we retest down towards here. 131.70 becomes support. We've got a speech from Deputy Governor Wilkins tonight from the Bank of Canada. That and a speech from ECB's Mesh and Japanese CPI today is about the only things worth noting. So keep an eye on that. But that 138.2% retracement level is the key level to watch. And of course, yesterday, you know, the market's still moving on these machinations. We had a US dollar week a day. And if we have a look at dollar Sing, if I can find dollar Sing, which I think went down here, didn't it? Yeah, that's right. Then, you know, we've got it still at the bottom edge of the range. Now, just quickly on commodities. Gold looking like it wants to go higher, but I'm not bullish unless it closes above 12.38. Support, you can see where support is. Silver had a big move, you know, % or more. But the reality is it's ratcheting either side of the range. So in that sense, you know, if you drop down to 4 hours, it's probably worth a trade. Copper, you know, we're just moving upwards and downwards within this pennant formation. A breakout, 255, 255 to 286.5. Inside is about 267 to about 282, 283. We're at 280 roughly now. In terms of oil, you know, inside day, just like this, you really need, first instance, you've got to break that trend line. Then you've got to get above this big down bar. The signal is that we don't have a signal yet and are waiting. Momentum could come out, but then you see a collapse like this. I'm respecting this trend line. That was a nice little collapse, but this is the broader one. So we'll see. It's going to be pretty volatile, I would have thought, until December 6th, which I think is when the meeting is. And that first signal we get to buy WTI and Brent, unless it's associated with some decent fundamental news, might be a head fake. WTI tried to rally but couldn't hold it again. So, as I say, some pressure there. Last but not least, Bitcoin. Bitcoin had an update. This is the weekly chart. Obviously, Bitcoin was up 1% or so. It's at 4462 based on Reuters, spreads and all that kind of stuff. People have fallen out of love with it. So that's it from me. It's going to be a quiet next 36 hours, I guess, but that also means it's thin. The story of the last few days is that people have moved to the sidelines. That makes it thinner. That means headlines have a bigger influence. That means people can push it further. But I won't burden you with any more of it. Have a good day. I'll catch you tomorrow. Bye for now.